Very much in focus today, of course, are trade talks between the U.S. and China in London that the president teased last week. Inflation data, and yes, follow through on Circle's successful IPO here at the stock exchange last week. Well, joining me now with more on the markets is Simeon Wallis, Chief Investment Officer and Partner at Aprio Advisory Group. Simeon, thanks so much for joining the show this morning down there in Atlanta. And what do you make with the stock market as close as it is to that February record?
Yeah, it's been pretty fascinating in that we've seen this very strong rebound in multiples, even though earnings estimates have been trending down coming out of earnings season since it. We've seen also credit spreads narrow. So the market is essentially looking past a lot of that volatility that we all felt over the first 4 weeks after the April 2nd announcements.
Yeah, and where do you think stocks are heading from here, Simeon? What are going to be the driving factors in the days and weeks ahead?
Yeah, well, we have the Fed announcement coming up. Our expectation is that the Fed is going to hold steady. They're going to be patient as economic data, while softening, is still showing growth. So we anticipate that the Fed will maintain its current policy. Once we get beyond that, we're going to get into July with earnings season. We'll get further insights into how companies are managing margins and thinking about what the potential impacts from tariffs are. And hopefully by that point in time, we'll also have more clarity on trade policies and where this settles out.
Yeah, of course, the impact on inflation with tariffs very much in focus too. And economists estimated inflation was up 2.5% last month from the same time a year ago, a little bit higher than what we've seen of late and still a bit above the Fed's long-term 2% target. Is there an expectation that you have in terms of how trade policy may impact the prices that consumers pay?
Well, there is. What we've seen is that companies are starting to price in anticipated higher input costs. And so when we speak to companies and understand what their perspective is, they'd rather get ahead of the game than be behind. So we would expect that you'd see some higher potential inflation on the margin from that. However, we also have had lower energy prices as expectations for global GDP growth have slowed. We've seen the oil prices come down a little bit. So that'll help offset some of that inflationary pressure, which leads us to more think that we'll be in a slow, gradual decline as we look at what inflation is likely to be over the next 2 or 3 months.
Yeah. In terms of earnings, we're in a bit of a lull right now. First quarter earnings, by and large, were better than expected. We know traditionally corporate earnings does actually drive the stock market forward. Were you able to gather any clues from companies in terms of the impact on trade policy as we're now in this transitionary phase between the second quarter results?
What we're seeing is that decision makers are in a period of fog, essentially, where they are on one hand trying to maintain those long-term expectations and around growth and what organic growth should be for their business, but at the same time, they are quicker to potentially pull back. So CapEx expectations have come down while pricing has increased. What that's meant for us is that companies are essentially trying to take a slower approach to thinking about how this year will play out. And in the back half of the year, we do believe that there might be some risk to earnings estimates currently if the trade policy continues to be uncertain. The quicker we get that certainty, the more likely we are to have a pickup in earnings growth as we look into the third and fourth quarters of this year. So that's the big factor here, is just understanding what's the time frame that decision makers can make decisions on. And what we've seen so far is that that's been a bit murky.
Yeah. We're also going to get consumer confidence, sentiment, I should say, toward the end of the week. And the expectation is that it's improved a little bit based on that preliminary read for June versus what we saw in May. Are you finding that the consumer is getting more comfortable to an environment where we see trade policy changing in real time?
On the margin, I would say they are getting a little bit more comfortable than where they were in April. But let's remember, we had consumer confidence plummet to levels that we haven't experienced in decades. So we're coming off of really a sharp bottom when you think about this. But we're seeing actually a bifurcated consumer. We have secure consumers, they're probably mid-career or later, that are well employed, and they're continuing to spend. They're spending a little bit more thoughtfully than they had in the past. So companies like Dollar General are noting that middle income and higher income consumers are a larger part of their mix. We contrast that with a more of a stretched consumer who could be earlier in their career or perhaps below median incomes, and they are definitely experiencing difficulties from the higher potential inflation rates and really what's compounded over the last few years. So it's important to think about the consumer not homogenously, but more broken into those two buckets.
Simeon Wallis, Chief Investment Officer and Partner at Aprio Advisory Group. Simeon, thank you.
Thank you.